A stock in focus is Chola Finance. Let's pull up that stock for you. And the management, the company reported a strong quarter. Hear them out in a conversation with my colleague Hiral.
D. Arul Selvan, Chief Financial Officer at Cholamandalam Investment, joins in. Mr. Selvan, welcome to the show. Always a pleasure to speak to you. I mean, a strong start to the year. Do you think you will be able to surpass your FY27 guidance? Because what, 20 to 23% AUM growth is what you had guided for the full year. But seeing the way the first quarter has been, what is it looking like?
I would right now want to keep the forecast or the projections at the same level because we have just crossed one quarter. Yes, it has been a good quarter and we have been very positive about the outcome of this quarter and the future. But let us go through the second quarter because second quarter is also a crucial quarter where the slowdown continues because of the inauspicious month and then the rainfall, etc. And I think always it has been the case where the first and second quarter are the little, slow quarters and then followed by the festival seasons and then the Q4, which gives us good traction. So if the second quarter also moves on well, then I think we should be in a position to even look at further revisiting our targets. But right now, I would rather keep them where we have said. We have not changed them through the course. We'd like to keep them as it is.
Okay, so nothing changes as of now, but obviously as things develop we will see some updates coming in there. Have you seen an impact of the West Asia crisis on the business anywhere, maybe from a sentimental perspective as well? And two, if not in the first quarter, do you think there will be some follow-up over there happening in terms of the coming quarters?
The West Asia crisis has got two ways of impacting. One is availability of fuel being a constraint. So far, we have not seen this constraint, and we have been able to bring fuel, and fuel availability is crucial from the vehicle finance perspective. If fuel availability is there, the price of the fuel, even if it sort of inches up a bit, does not impact much, especially in the context of the customer profiles we have, because generally they tend to pass it on because they are a day-to-day price. They price the product or price the services on a day-to-day basis. The second important issue is the West Asia crisis should not result in some shortfall in raw material or shortfall in production or shortfall in some other activities which would impact transportation. If that impacts transportation, then it will also have a fallout on our vehicle finance portfolio, because if there is nothing to transport, then there will be also a lack of business. So these only are the issues, I would say that.
Okay, so basically what you're saying is, on the back of the West Asia crisis, the impact in terms of elevated crude prices, that could have an impact in terms of the vehicle finance portfolio, and that is something that one should watch out for.
No, I'm not talking about the increase in diesel price. I'm talking about the availability of diesel. That is if there is a price increase on account of the crude price movement, that gets passed down. But if the diesel itself is not available, then the vehicle cannot run. That will be the only crisis. So far, in spite of the more higher tension periods, we have country has managed to bring in diesel from other sources, etc. So there has never been a situation where diesel availability had been an issue.
Okay, understood.
To bring in diesel from other sources, etc. So there has never been a situation where diesel availability had been an issue.
Okay, understood. And how are you baking in below normal monsoon forecast right now in terms of your expectation? I know it's something too early to even really call out for, but if you have to look at it as a risk, how big a risk that could be?
See, the monsoon, at least for the current financial year, is not going to impact much because the storage and the irrigation facilities and the reservoir levels are quite adequate, across the country except in one or two states. So I think the immediate crop will not have an impact, but we will have to see how it impacts the subsequent crop pattern. So that is what is to wait and watch for, and we will keep observing that. But I think monsoon has picked up a bit, so there should not be too much of a shock.
Okay. And Mr. Selvan, what about the asset quality? Are you seeing any early signs of pressure? Because while growth is remaining absolutely strong from a profitability front, from an AUM front, the gross stage 3 assets have increased sequentially. What does this actually tell you? Is this as a temporary blip that an investor should look at it, or a mild stress that you're seeing anywhere?
See, again, if you look at it from a seasonality perspective, in Q1, the asset quality, slightly, the stage 3 or the NPA numbers increased as compared to Q4. So this is the trend. And if you look at it last year versus current year, the increase had been much muted this year. So I think that is a good start for the current year. So if that is muted in Q1, normally Q1, Q2, there will be slight increase in the NPA numbers, and then it further reduces in Q3, Q4, which are the good quarters, as I was saying earlier. So this trend is always been the case, and we are going through the same thing. But actually, the positive thing is the increase compared to last year, Q4 versus Q1. In the current year, Q4 versus Q1 have been much muted. So that's a good start for starters.
Okay. And, if you have to look at the year, what is tougher for you? Is it going to be maintaining the growth momentum or preserving the credit quality in FY27?
See, between growth and credit quality always is the important one, because growing at the cost of credit is not good. So credit quality will always be on the forefront of our, watch list. So we keep, tracking credit much more closer, and that would be the important criteria. Growth is there. Growth will come, because CV cycle is turned, so there should be a good growth coming in, and we have multiple levers with regard to almost 8 products in our business profile, which would help us to moderate growth, even if one or two of them goes through a slow cycle.
Okay. And Mr. Selvan, the other question I have for you is, if there is a prolonged period in terms of crude prices, does your credit cost get altered in any way? Because 1.5% has already been achieved in the first quarter of FY27, if you have to look from a guidance perspective, versus a 1.8% in FY26. So what is the stance looking like there?
Yeah, I again reiterate that crude price alone will not be the factor that could result in the credit cost going up. Crude price is generally passed on, but mostly the most important thing is availability of diesel and availability of loan. These are the critical parameters which, if they have an impact, then it will have a fallout on the portfolio. Otherwise, we are confident the price of crude alone will not, alter our credit.
And Mr. Selvan, on one side we're talking about the crisis that could come in, but on the back of FCNRB, the liquidity in the system is something which is going to be available at an abundance for some reason, right? Now, for a Chola, do you see any benefits coming in on that front, where there could be a pass on coming in for NBFCs as well, number one? And two, which are those segments that will drive growth then?
See, the FCNRB is very good move by RBI to bring in liquidity. But, currently or as of today, the pricing, at least from Chola's perspective, we are able to get from domestic itself much cheaper than the completely hedged or, the landed price of loan backed on the FCNRB deposits. So we still have not got any, we haven't moved on that front to tap this source. But that source is good, and that helps, have a larger liquidity, and it will help us to grow, because money availability is good for us, because that is what is our raw material for our growth.
Okay, and what segments will drive growth?
See, the availability of funding is not necessarily linked to each business directly or independently. We borrow in totality and we lend to the different businesses. So the availability of funds.
My question was mainly in terms of separate, I mean, I just clubbed into questions, but which are the segments that will drive growth for FY27?
Of course, vehicle finance, the CSL business, gold, LAP and HL, all of businesses are looking positive now. So these businesses will grow. Vehicle finance will grow a little faster as we see the CV cycle turn, and if that sort of holds on, so there we will see a better growth. As vehicle finance will grow a little faster as we see the CV cycle turn, and if that sort of holds on, so there we will see a better growth as compared to last year. LAP has already been growing at a good pace, so it will continue its momentum. HL will also continue its momentum because there is enough and more demand for housing, and there we see a good traction coming in. The unsecured we will move with caution. Yes, there is always a possibility of the unsecured becoming stressed in case the economy turns poor. But it's a very small portfolio. So from a growth perspective, from a smaller base, you will see the growth becoming larger.
Okay, that was the Chola management talking about their numbers, come off the highs, but still about 2% up. So much to talk about on Indian markets. We have a great conversation on the other side.